So I blew up my account. Not once, twice. And you know what the worst part was? I was right about the trade. The setup was perfect. My analysis? Flawless. But I still lost everything. That's when it hit me. Being right was killing my trading. I know that sounds insane. Like, bro, isn't the whole point to be right? But stick with me here, because once I stopped obsessing over being correct, everything changed. My P&L flipped, my stress disappeared, and trading actually became fun. In the next 25 minutes, I'm going to show you exactly how the need to be right is sabotaging your trades, and more importantly, how to break free from it. This isn't some motivational fluff. This is the actual shift that took me from gambling my lunch money to having a system I actually trust. Let's get into it. Okay, real talk. When you enter a trade, what's the first thing you want? You want to be right. You want that dopamine hit when the candles move your way. You want to screenshot your winning trade and post it. You want to prove to yourself, and maybe your friends, your parents, whoever doubted you, that you know what you're doing. Sound familiar? Here's the problem. Trading isn't school. Remember in high school, when you'd study for a test? You'd memorize everything, take the exam, and if you got an A, that proved you were right. You studied correctly. You knew the material. The system rewarded accuracy. But trading? Trading doesn't care about your analysis. You can have the perfect setup. You can read every indicator, follow every rule, do everything by the book, and still lose money. Not because you were wrong, but because the market just decided to do something else that day. And that's where the ego trap comes in. When you tie your self-worth to being right about every trade, you stop being a trader. You become a gambler protecting your ego. Let me give you an example. A few months ago, I called a trade in my group chat. S&P is dropping. I'm shorting this easy money. I had my reasons. The chart looked perfect. Everyone was hyping me up. The trade went against me immediately. But did I cut it? No, because cutting meant admitting I was wrong in front of people. So I held. I averaged down. I told myself, it's just a pullback. My analysis is solid. I lost $800 that week. Not because my analysis was terrible, but because I needed to be right more than I needed to make money. My ego was literally more expensive than my stop loss. And here's the crazy part. The trade did eventually go my way, 2 weeks later. But by then I was already out, blown up, watching from the sidelines. That's when I realized something that changed everything. The market doesn't reward you for being right. It rewards you for managing being wrong. Let that sink in for a second. Because once you understand that, really understand it, trading becomes so much easier. The pressure lifts. The stress fades. And suddenly you can actually follow your plan. But how do you actually do that? How do you stop caring about being right when your brain is literally wired to crave validation? That's what we're breaking down next. Okay, let's talk psychology for a minute. Your brain is obsessed with being right, and it's not your fault. It's evolutionary. Back in caveman days, being wrong could get you killed. You hear a rustling in the bushes. You think it's nothing, and boom, you're lunch for a tiger. So your brain evolved to hate being wrong. It sees uncertainty as danger. Fast forward to now. You're not running from tigers anymore. But your brain still treats being wrong like a threat. In school, being wrong meant bad grades. In social situations, being wrong meant embarrassment. Your entire life, you've been conditioned to avoid mistakes. So when you start trading, your brain treats every losing trade like a life or death situation. And here's where it gets worse. Once you're in a trade, your brain starts looking for evidence that you're right. This is called confirmation bias, and it's brutal in trading. You short a stock. It bounces. Your brain immediately starts searching. Why is this still a good short? Oh, look, the volume is weak. Oh, the RSI is still overbought. Oh, this technical analyst on Twitter agrees with me. You ignore everything that says you're wrong. You tunnel your vision on anything that says you're right. I've done this so many times. I'll be down on a trade, and instead of checking my exit plan, I'm scrolling Twitter looking for confirmation. Finding one person who agrees with me feels better than cutting the loss. but that one person isn't paying for your trade. You are. So what does this actually cost you? 3 things. 1, you hold losers too long. Because cutting means admitting you were wrong. You let small losses become big losses. You tell yourself, I'll just wait for a bounce. That bounce never comes. 2, you cut winners too early. This one's sneaky. You're up on a trade, but it pulls back slightly. Your brain panics. What if I lose this profit? What if people see I was wrong? So you lock in a tiny gain instead of letting it run. 3, you stop following your system. You start making random trades to prove you can win. Revenge trading, over trading, trying to force the market to validate you. And the worst part, the more you lose, the more desperate you become to be right. It's a vicious cycle. But here's the good news. Once you stop trying to be right, this cycle breaks. Completely. All right. So how do you actually stop caring about being right? This is the part that changed everything for me. And I'm going to break it down into 3 mental shifts you need to make. First shift, stop thinking about individual trades. Start thinking in probabilities. Here's what I mean. Let's say you have a setup that wins 60% of the time. That's solid. That's profitable over time. But here's the thing. You don't know which trades will be the winners. You could take 10 trades. The first 4 could all be losers. That doesn't mean your system is broken. It doesn't mean you're wrong. It just means that's how probability works. Think about poker players. The best poker players in the world don't win every hand. They don't even expect to. They just make the mathematically correct decision over and over and over. And over time, the odds work in their favor. Trading is the same. Your job isn't to be right about this trade. Your job is to execute your system with consistency. If your system has an edge, the math will take care of the rest. This one shift takes so much pressure off because you're not trying to predict the future anymore. You're just playing the probabilities. I started keeping a journal where I track my trades, not just wins and losses, but how well I follow my plan. So if I take a trade that fits my setup perfectly, I follow my rules, I manage my risk correctly, and I lose, I mark that as a win in my journal. Sounds crazy, right? But that losing trade was still a good trade. I did everything right. The market just didn't cooperate. That's not on me. And you know what happened? My stress around trading dropped by like 80% because I stopped judging myself based on outcomes I can't control. I started judging myself based on process, which I can control. Second shift, change your definition of being right. Most traders think right means the trade made money, but that's not right. That's lucky. Here's what right actually means in trading. You followed your plan. You manage your risk. You cut your loss when you were supposed to. You let your winner run when you were supposed to. That's it. A right trade can still lose money. And a wrong trade can still make money. I know a guy who bought GameStop as a joke, made $10,000. Does that mean he's a genius trader? No, he got lucky. He was wrong, but the market bailed him out. On the flip side, you can take a perfect trade, great risk reward, solid setup, everything by the book, and lose. That doesn't make you wrong. That makes you a professional who got stopped out. Once you separate correctness from profit, everything clicks because now you're not gambling on outcomes. You're building a process you can trust. Okay, so we've covered the mental shifts. You're thinking in probabilities. You redefine what right means. But here's the thing, mindset alone won't save you. You need systems. You need rules. You need structure. Because when the pressure's on, when you're down money and your ego's screaming at you to hold the trade, that's when systems save you. So let's talk about the practical side. All right, let's get tactical. These are the actual systems I use to stop my ego from hijacking my trades. Rule number 1, you don't get to decide when to exit once you're in the trade. You decide before you enter. Before I click buy or sell, I write down 2 things. 1, where I'm cutting if I'm wrong. 2, where I'm taking profit if I'm right. No exceptions. No, I'll just see how it plays out. Because once you're in the trade, your ego takes over. You start justifying. You start hoping. You start making decisions based on emotion instead of logic. But if you pre-commit to your exits, your ego doesn't get a vote. The market hits your stop, you're out. No thinking required. The market hits your target, you take profit. No second guessing. This one rule has saved me thousands of dollars because it removes the moment where my ego whispers, just hold a little longer. Second system. Never risk more than 1 to 2% of your account on a single trade. I don't care how confident you are. I don't care how obvious the setup looks. 1 to 2%. That's it. Here's why this matters for your ego. When you risk 10%, 20%, 30% of your account on one trade, being wrong feels catastrophic. Your brain goes into panic mode. You can't afford to be wrong. So you hold losing trades way too long, hoping they'll turn around. But when you risk 1%, being wrong doesn't hurt. It's just Tuesday. You can take 10 bad trades in a row and still have 90% of your account. You're still in the game. Your ego doesn't freak out. You can stay calm and stick to your process. Small risk equals small ego. Third system. This is the one I mentioned earlier. Keep a trading journal that tracks how well you followed your plan. At the end of each week, I don't just look at my P&L. I ask myself, how many trades fit my setup? How many times did I follow my exit plan? How many times did I let emotion override my system? And then I grade myself. A, B, C, D, F, based on process, not profit. Some of my best weeks have been red because I follow my plan perfectly and the market just didn't cooperate. Some of my worst weeks have been green because I got lucky on a couple trades, but I broke my rules multiple times. If you're only tracking profit, you're training your brain to chase outcomes. But if you track process, you're training your brain to trust the system. And over time, that trust compounds into consistency. Last system, build losing streak budgets into your plan. Here's what I mean. If your system wins 60% of the time, that means it loses 40% of the time, which means you will have stretches where you lose 3, 4, 5 trades in a row. That's not failure. That's math. But if you don't expect it, your ego spirals. You start thinking, my system is broken. I'm broken. I need to change everything. So instead, I write it down. My system can lose 5 trades in a row and still be profitable over 50 trades. When I hit trade 3 of a losing streak, I don't panic. I remind myself, this is normal. This is expected. Keep executing. It sounds simple, but it's powerful because it stops you from abandoning a good system just because you hit a rough patch. Okay, so let's bring this all together. What actually happens when you stop trying to be right? First, revenge trading disappears. Because revenge trading only happens when your ego is bruised, when you need to prove you're right, when you need to make back the money you just lost. But when you stop caring about being right, there's nothing to avenge. You took a trade. It didn't work. Cool. Next trade. You're not carrying emotional baggage into your next decision. You're not trying to force the market to validate you. You're just trading. Second, your risk management becomes flawless. No more moving stop losses. No more just one more chance. No more holding losers and cutting winners. Because you're not protecting your ego anymore. You're protecting your account. And here's the wild part. When you manage risk properly, you actually start making money, not because you're suddenly right more often, but because your winners get bigger and your losers stay small. The math works in your favor. Finally, third, and this is my favorite part, trading becomes boring. Like, genuinely boring. You're not on an emotional roller coaster anymore. You're not refreshing your app every 30 seconds. You're not doom scrolling Twitter, hoping someone validates your trade. You enter. You set your exits. You walk away. And when the trade closes, win or lose, you just log it and move on. It sounds boring, but boring is profitable because the traders who make money long-term, they're not the ones having heart attacks over every candle. They're the ones who treat trading like a business. Execute, track, repeat. All right, let's wrap this up. Here's the truth. The market doesn't care about your ego. It doesn't care if you're right. It doesn't care if you're smart. It doesn't care if you deserve to win. The only thing the market rewards is consistency. And you can't be consistent if you're constantly trying to prove yourself. So stop trying to be right about every trade. Start thinking in probabilities. Predefine your exits. Risk small. Track your process. And most importantly, give yourself permission to be wrong. Because here's the secret nobody tells you. The best traders in the world are wrong all the time. They just don't let it bother them. They take the loss, they move on, and they trust that over time, the math will work out. That's it. That's the game. So here's my challenge for you. Go into your next trade with zero attachment to being right. Predefine your exits before you enter. Risk 1%. And when the trade closes, whether to win or a loss, ask yourself one question. Did I follow my plan? If yes, that's a win. Mark it down. Build the habit. Do that 10 times, then 50, then 100, and watch what happens to your account. Watch what happens to your stress levels. Watch what happens to your confidence. Because once you stop trying to be right, trading becomes so much easier. All right, that's it for today. If this clicked for you, drop a comment and let me know. And if you want more real talk about trading without the fluff, hit that subscribe button. Let's level up together. I'll see you in the next one.